Right, the next concept we're going to discuss in the potential action zone section of our FX Trader development program is the concept of the breaker block. Now, as I mentioned before, it's a concept made popular by Michael Huddleston, but FX Price Action Setups has its own little take on this, on the breaker block and how to use it and incorporate it into your trading plan. Now, we've already discussed the concept of liquidity, and what the market often does before it reverses is we've taught you that it reaches for this liquidity, picks up the orders, and gets the fuel for the next move. But just before the market spikes or runs into this liquidity, it normally has sort of a reversal bar, much like the order block we discussed in the previous chapter, where the market will make, for instance, in the example on the left here, it'll make a quick run down before the market spikes up, takes the liquidity, and then turns around. And this move again is an algo driven move, and this block we're going to mark off as potential future areas for looking for trades, potential action zones. Looking on the right here, we got a bullish liquidity run. The market makes a spike up, runs the liquidity, and then turns around. So yes, we're going to be marking those areas, and something to note for when even figuring out your bias. If the market takes this liquidity and the market is still above this breaker block, it hasn't traded below it, then you cannot change your bias yet. So we're not only going to be using this for potential action zones, but it's also a method much like structure break in figuring out the momentum in the market and your bias. So let's quickly have a look at what that looks like in the charts. All right, the first chart we're going to look at is the CAD Swiss franc 4 hour. And we had the market do a bit of a range and then have this impulse down, and it looks like it's busy with a correction now. Moving on to the next slide, as you guys can see, the market has this big run up into this liquidity area. And if you're familiar with our corrective patterns, then you might notice that this is a ABC correction or zigzag pattern. But what you need to note here is where this move starts that grabs this liquidity. And on this chart, it'll be this little bearish bar down before the market spikes up. And moving a little bit forward, as you guys can see, the market trades lower and trades below this bearish candle or bearish block before the market ran the liquidity. Now this is our breaker block, and we will be marking those breaker blocks off as potential action zones to look for future trades. So marking that off, we mark the breaker blocks in blue, so we can all sort of speak the same language. And if you move forward on the chart, as you guys can see, quite often these areas will act as support or resistance, and therefore we use them as potential action zones. Moving to the next chart, this is the Euro Aussie Dollar 4 hour chart. And I want to bring your attention to this last move down here. As you guys can see, I forgot to mark this off the chart, but this last move down was actually to clear these lows over here. All right, so as you guys can see, the market spiked these lows and then had the big reaction up. And now you got to ask yourself, where did this move start? And as you guys can see, the market came down, had this little reversal, and then it had its final run down for the liquidity run. So this will be the area that you're going to mark as your breaker block. And the market spikes up, breaks above the breaker block. And even though, it sort of didn't take these highs, it did take the breaker block. And from a bias point of view, even you can now switch your bias to long. And especially if it has quite a clear run above these breaker blocks, then you can mark them off as potential action zones in the future. So yeah, just if you go a little bit forward, as you guys can see, the market again made a nice ABC into this little area, and then the market continued higher. Take a note of these, and again we mark them in blue. Yeah, there's the little ABC correction, and I hope seeing this, the market is starting to make sense, and you guys are seeing how the market is flowing and moving. All right, here is another one that we discussed in depth on social media and on YouTube actually. This was a big trade on the USD CAD that we were looking for. And the market actually made this little run up and had this big spike into liquidity. Now you guys can't see it right now, but if I zoom out a little bit, this was the high that was cleared with that spike. So just moving back to the chart, as you guys can see, it cleared those highs, and for all money I thought that the high was in on the USD CAD. But if we mark off the area where this stop run started, we had this little last bearish run here before the market shot up and rejected. Now the market never started trading below this breaker block that I marked here. and therefore you could not change your bias quite yet. And I think a few years ago this would have been enough, and the market would have turned around. But as I mentioned, the market will evolve as traders get smarter, and the market a few days later had to make another run and actually had to clear highs again before it started breaking down. There was a news event, the Bank of Canada released some statement about steel import tariffs, and they ended up running the highs again because I don't think they got enough liquidity there, and only then the market broke down. So it's very important to note where this move starts, and you have to wait for this level to break before it becomes significant in taking trades. So yes, the market spiked the highs, it never cleared those lows, never broke the market structure, never broke the breaker, and had a second run for liquidity over there. Now, if you look at where this second stop run started, you guys can see this was the last move down before the market spiked up. And this will be the area that you're going to mark off as your breaker block. So what you want is for the market to come below this breaker block, and then in the future when it comes back, this might be a potential action zone in looking for shorts. And looking to the right here, as you guys can see, the market broke down, and many weeks later the market actually came back, tested that level, and then started breaking down. All right, moving to the next slide, the pound JPY. As you guys can see on this chart, we had the market print a few lows here. It started sort of ranging a bit and then had one final big push down before the market turned around. So ask yourself, where did this last push down start? It started with this little bullish run here, and then the market started running down. Maybe this was a news event. It's definitely algo driven. Market picks up the last bit of liquidity and then starts going up. So we'll mark off this area as a potential action zone in the future. And just moving a little bit forward, a lot forward actually. As you guys can see, the yen crash that happened at the beginning of 2019 actually crashed perfectly into this breaker block area, found its resistance there, and now it's busy moving up. So yeah, these levels are still significant quite far in the future, and looking for these sort of opposite moves for the strong run into liquidity and the market to turn around. Quite often the market will come back to those levels, and those are high probability levels that you'll find some potential trades, and that's why we mark these off as potential action zones. All right, finally going to another trade, again the USD JPY, the trade that we've been discussing over and over. This was the 3 drive trade, and we actually just looked at this order block in the previous section where the market pushed up, made this little order block, and then spiked up. Now, what you guys did not know at that stage, and let me just mark this off for you guys, is before the market, when the market made its third drive, it ran the liquidity here and it spiked up. Now, what do? You got to ask yourself, where did this last round start? And as you guys can see here, there was one final move up, and that actually broke the lows. So this area here is also your breaker block, and if you mark that off, it actually overlaps your order block. And when these breaker blocks and order blocks start overlapping, or they sort of become nested, this becomes really high probability areas that you can look for setups. With everything in trading, the more confidence you have, the stronger it gets, and you'll quite often see these order blocks like you have over here start developing, in breaker block areas like this. And make a note of that and start looking for maybe some examples in the charts. And so you can look for these levels and start trading them with confidence. And just looking at one more such example, this again, USD JPY 4-hour chart. We had the market make this run up before, the big run down, takes the liquidity, spikes up, makes the order block, and runs higher. Now, as you guys can see, I've marked the order or the breaker block in blue, and I've actually marked the order block in green. And the yellow area is actually, if you draw these lines on MetaTrader, the yellow area is where these overlap. And as you guys can see, in this overlapped area is actually where the market ended up finding its support before having this massive bull run afterwards. So yes, look for these sort of nested breaker and order block areas for high probability potential action zones. Yeah, okay, so this was just a quick rundown on the breaker block. Like I said, I don't want to hop on too long, and I'm trying to keep these lessons short. But again, we got the breaker block channel in our trading room under the concepts channels. You'll find some more examples on there. And again, if you are going to use these concepts in trading, just tag hashtag breaker block, and we can populate the concepts channels for future students. But yeah, go and look for these examples. And if you're looking for perhaps another video on these breaker blocks, I did do one on our YouTube channel. If you go to all our videos and you just scroll back a few months, you'll find one there on the breaker block. It's a similar explanation. And I hope this is clear. If it is unclear, just come and ask us, and we'll give you some further explanation on these breaker blocks. But yeah, it should be simple. Like I say, just look for these liquidity runs and ask yourself, where did this move start? Mark that off and wait for the price to break above it, and then you can look for the price to return there for high probability potential action zones.